Hello and welcome to today's market update. Today is 25th of October. You're looking at the daily chart of S&P 500. S&P 500 had another strong day, was up 1.63% to close at 3859. Nasdaq 100 was up 2%, over 2% to close at 11,670. But after the market closed, both Google and Microsoft reported earnings, and the market reacted negatively. The looks like the numbers results were a little bit weaker than the market was expecting, especially Google's. In after hours trading, Nasdaq is down over 150 points as I speak. We'll have to see what happens tomorrow. So let's just talk about what happened in the market based on the cash market. So this is S&P 500. It was up, as I said, 1.63%. You can see that it's been moving higher. Today's rally was based on what happened in the bond market, especially on the long end. So let's just have a quick look at the 10-year. So the 10-year, this is 10-year. You see this big red candle. 10-year bond yield was down almost 17 basis points to close at 4.07%. Now, the yield fell because the market is beginning to feel that after Federal Reserve is done increasing interest rates in the November and the December meeting, they may start to slow down the rate at which they increase the interest rate. Federal Reserve, by the time they finish increasing their interest rate in November and December, Fed funds rate is likely to be around 4.5%. And many feel that the terminal rate would be, let's say, maximum 5%. Market doesn't feel that a Federal Reserve would increase interest rate above 5%. They can take it up to 5%. Some of the economic reports are showing that the parts of the economy are weakening, especially in the housing market. So let's have a look at a report that came out today. So this is the Case-Shiller Home Price Index. This shows home prices, what's happening to home prices month over month. You can see that this report that came out was for the month of August. In the month of August, the home prices fell 1.6% over the previous month, and then in the month of July it fell 0.8%. So we've had 2 months of monthly declines. Prior to that, home prices were going up on a month-over-month basis. You can see that it rose as high as 3.1% in March of this year, and since then home prices on a month-over-month basis has been decreasing, and in fact in the last 2 months it has registered actual losses. If you look at the year-over-year, this is the year-over-year. For the month of August, home prices were up 13.1% over a year ago level. If you look at April, home prices were up 21.3% year over year. Since then, the growth rate has been decelerating. It's still a spectacular gain, up 13.1% year over year, but you can see the rate has been decreasing. So as a result of this, many people now feel that the interest rate increases that the Fed has implemented in the market is doing its job. As a result, we are seeing quite a bit of weakness in the housing market, and market now feels that Federal Reserve probably will not go above 5%. The Fed funds futures, they were already at 5% right here. So the market is already recognizes the 5% interest rate is already factored in the market. You can see the Fed fund futures, it closed at 4.89. It traded as high as 5% last week. Just pulled back a little bit. So if Federal Reserve doesn't go above 5%, which means that the market already feels okay with that, and if rates come down a little bit, that can only be supportive for stocks. So that's the reason why market has rebounded strongly for the last couple of sessions. You can see S&P 500, three green candles. It rose from 3650 to almost 3850 today. But in after hours, futures are down. If I look at the futures very quickly in after hours, S&P 500 is down a little bit. Nasdaq 100 is down quite a bit. It's down over 150 points. So we'll have to see how the market reacts tomorrow. But anyway, if we look at S&P 500, you can see S&P 500, this rally has pushed it above its daily 20 and 50-day moving averages. The green one is the 50-day moving average, which is quite positive. You can see the momentum indicators have been moving higher. RSI has been moving higher. It's gone above the 50 level. MACD, you can see, is crossed over right here, and it's been steadily moving higher. It's still below the zero line, but it's heading towards that level. If it's able to cross above the zero line, that would be really, really positive. It hasn't done so yet, so we'll have to see how, based on market reaction in coming days. This week we've got quite a few big tech earnings coming out. As I said, Microsoft, Google came out. Reaction is negative so far. Tomorrow, Facebook, Meta comes out. Thursday, we've got Amazon and Apple. So all those things will have an impact on the market. So we'll see how things play out. But at least the momentum indicators are improving. Now, for S&P 500, the cash market, the resistance, next area of resistance is right here, 3,900. If it's able to get through this 3,900, then you've got this big 200-day moving average sitting, which is around just above 4,100. It's around 4,126. So there's quite a bit of space if it can get through 3,900. The support definitely is at the first support would be at the 50-day moving average, which is around 3730, and then at this level, which is around 3650. That's where this rally began. So those would be the two support levels. If we look at NASDAQ 100, so this is the cash index, you can see NASDAQ 100 closed right at the 50-day moving average. In the futures market, there's some rejection at this level. So initial support for NASDAQ would be the 50-day moving average, which is the yellow line, and that's around 11,200. And then below there, the support is around 11,000. On the other hand, resistance would be, if it's able to get through the 50-day moving average, the next area of resistance would be right around here, which is around 12,000 at this level. And above there, the resistance would be right here, which is around 12,700, and that would also bring the 200-day moving average in play. For NASDAQ too, you can see the momentum indicators has started to move higher. RSI has been going up. It closed above the 50 level. MACD crossed and is moving higher, but still remains below the zero line. We want to see it get back above the zero line right here, and that would be positive. So we'll see how things play out in coming days. If we look at the dollar index, with rates pulling back, dollar has been weak. It lost over 1.1 points. It's now coming towards the bottom of this channel. It still remains in an uptrend, and within this uptrend, it's been trading inside this channel. So even if it comes to the bottom of this channel, the uptrend would still be intact. But you can see that the momentum indicators are heading lower. So momentum is decreasing. You can see MACD has crossed and heading towards the zero line. It still remains above the zero line. If it goes below the zero line, that would be negative. It hasn't gone below the zero line for a very long time. You can see it came up to the zero line and then started moving higher. You can see right here, it came to the zero line and started moving higher. It could do the same this time as well. But if it goes below the zero line, that would be negative. and that would mean it would be positive for stocks. So we'll see how things play out, on the for US dollar, and that would depend on what happens to 10-year bond yield. If we look at the 10-year bond yield again, you can see there's a big red candle. So there is support around 4%. If the 4% is breached, then the next real support level is around 350 area, which would be right around here. So we'll see how, whether or not this 4% is breached. So that would be the near-term support. If it goes below 4%, then dollar could see additional weakness. Then dollar could very well break below this channel. So we'll see how things play out in coming days. If we look at some of the sectors, the rally has been broad-based. This is XLK. You can see XLK just closed above this previous swing high. Momentum indicators are looking positive. But tomorrow, if the market pulls back, then we could see some pullback from here. If we look at XLY, it's also trying to, it closed above this previous high. So that's looking good as well. XLF, new swing high. That's looking good. Our MACD is about to cross above the zero line. That's positive. XLC, this is the communication sector. That also has closed above this previous high. If we look at XLB, again, that also, so you can see a number of S&P 500 sectors, have been making higher highs. And that's positive. That shows that this rally has been broad-based. If we look at the biotechnology sector, so it's now come up to this, it's just basically going sideways right now. There is this trendline resistance. We'll see whether or not it can break through that level. Solar sector, they had a horrendous period, but today was a good day for solar sector. This is the Invesco Solar ETF 10. It was up almost 5% today. So this is an oversold bounce, but welcome bounce nonetheless. Some of them, individual stocks like Enphase and Solar Edge, they moved down quite nicely. If we look at some of the individual stocks, Apple, so you can see Apple has been going up. It's broken through this resistance at 147. I highlighted Apple on the weekly chart and showed that it was forming a double bottom right here. That's a positive sign. And since then, Apple has had a strong run up. If the market pulls back tomorrow, Apple can give back some of the gain. Apple reports earnings on Thursday, so we'll see what happens. But overall, it's looking positive. If I look at the moving averages, you can see that it's already closed above the daily 20 and 50 exponential moving average. The next key level is this 200-day moving average, which is right now around 157. We'll see how things play out in the coming days. But it's looking positive right now. The price action is bullish. Momentum indicators are also positive right now. MACD hasn't crossed above the zero line. So, if it does so, that would be really, really positive. If we look at Tesla, so Tesla, it's, trying to form a double bottom right here. Now, Tesla closed at just over 222. Now, 222 is actually, so if you take a look at this area, on a closing basis, it has just marginally closed above these level. So this previous high on a closing basis is around 222. So it just closed above 222, and you can see that it's got this double bottom pattern. So it is beginning to look positive. I can see RSI has been moving higher, but it's still below 50 level. But it is improving. MACD just crossed, but remains well below the zero line. So we need a little bit more, but at least it's formed the right sort of structure, a base from which to move higher. It was oversold from big decline, but it's beginning to put in the right structure right now. You've got the moving averages which will act as a resistance. The 20-day moving average is around 231. The 50-day is around 253. So those would be the levels that would act as resistance. But it's beginning to look positive. If it's able to get through this 230 level, that would be really, really positive. If we look at Microsoft, it was looking positive. It's been going up, closed above the daily 50, but closed right at resistance, which was the high set in early October. But if in aftermarket the reaction is negative, so we'll have to see what happens tomorrow, and then see how the pattern changes. But it was looking positive. This area is an important area. If it's able to get through, there's quite a bit of space here for it to move up before the 200-day moving average comes into play. If we look at Google, which was another stock that reported earnings and reacted negatively, Google was also moving higher since reaching a low of around 95. It's been gradually moving higher. It closed right at the 50-day moving average. Momentum indicators have also been going up. If it's able to clear through this 50-day, there's quite a bit of space for it to move. But the reaction in the aftermarket is negative. So support would be around 95 and then 95. So we'll see what happens to the stock price tomorrow. If we look at Amazon, which will be reporting on Thursday, so Amazon is also gradually moving higher. It's got quite a bit of, it closed at the 50-day moving average. There's also horizontal resistance around 120, 122, 123 area. So we'll see what happens to Amazon. If the overall market pulls back tomorrow and the day after, then we could see some weakness. Net overall, I don't think a day or two of profit taking in coming back to S&P 500, because we've had 3 good days. I don't think it's a bad necessarily a negative thing if the market has pulls back 1 or 2 days. I think this can only be healthy. Overall momentum, overall the momentum indicators are showing moving higher. So I think 1 or 2 days of rest is not necessarily a bad thing. Also, next week we have the FOMC meeting. This week we have the earnings. Next week we have the FOMC meeting. So there's a lot going on in the market. So 1 or 2 days is not going to change the overall trend. I think that might be healthy. So we'll see what happens to market tomorrow, this week, how the market deals with overall tech earnings. So that's all for today. Thank you very much for watching the video.